Well, hey guys, thanks so much for joining us. With so much going on in the world, it's time to get back in touch with our friend James Anderson. He's over at JM Bullion. He's also the author of The Beginner's Guide to Bullion Investing. And we haven't spoken with James in, wow, what would you say, James? Probably a couple of years, huh?
Yeah, it basically throughout this entire little mini bear market we've been running through, we haven't spoken in about 3 or 4 years.
Well, we've been following your work, and in fact, we just posted a video from you the other day about SDRs, which you reminded all of us SDRs have lost 96% of their value since their inception in 1969. And as we see the world's paper markets beginning to crash, and we see currencies crashing, and all of this endless printing, a lot of people, including James Rickards, are suggesting that the future will be fixed by SDRs, but that's no fix, is it? The only fix for what ails us is a return to constitutional money.
Yeah, it's pretty obvious, when you look at like the IMF, what they do, like last year in their meetings, and if you read articles that are written by, technocratic authors who do guest publishing in places like USA Today and stuff like that, they're basically telegraphing what's going to happen. It looks like they're going to, try and have the Chinese renminbi get involved with the SDR this year.
Yeah.
And basically, I think the goal is to try and create something where there's, the U.S. dollar is not the sole reserve currency. It's more of a shared reserve currency for the world, with the IMF as the lead. And, if you study the track record of the IMF, or if you speak to anyone who's ever lived in third world countries where the IMF's been involved, these people are, they're pretty much criminal banksters. It's the standard operating procedure where they come in and bankrupt a country, get them over indebted, steal their infrastructure, and sell it off to their cronies for pennies on the dollar. So these people, their track record is just outright very bad. So, yeah, like you said, in turning back toward what our founding fathers called money, which was gold and silver, it's always been money and always will be, no matter what these people to say or do. And the free markets, to be able to decide what your money is and not have a bankster cartel force you to use their script, that would be a nice thing to have. But as you're saying, the SDR is likely going to be in the running for what's next in the monetary regime.
Why don't we talk a little bit about the Swiss National Bank's surprise announcement to remove the peg from the franc to the euro. That caught just about everybody by surprise, and I think it just shows the size of the fissures in the worldwide markets, in the monetary markets. Andy Hoffman and I just talked about this, and it's a dramatic event. What did you make of it?
Yeah, it's kind of part and parcel with what central bankers are. They're basically, the job description is to manipulate, to mislead, to lie, and to use cunning tactics to execute your policy based on your best interests. And so, like, if you read this guy Thomas Jordan, he is the chairman of the Swiss National Bank, which is their central bank, basically. He the week before was going along with what the policy was, and then obviously all of a sudden they just switched the policy. And afterwards, he's basically telling people, he says to reporters, literally, he says this: if you decide to exit such a policy, you have to take the markets by surprise. And that literally is what he said. So basically, if you decide to change your policy, you just have to come out and do it, and it doesn't matter what the repercussions are. We're just going to do it. So it's just basically a lesson for people out there who actually listen and follow what central bankers say. They're just going to do something else completely one day, and you're going to be sitting there. Intraday, the Swiss franc, it moved 25% intraday. So, for something like that, all of a sudden your currency moves 25% intraday. That's a huge swing in your entire wealth if you have it all sitting in Swiss francs or in other currencies. So basically, it's just an example of what's to come. More and more of this will come. And this is just like another step in the currency wars that we're looking at.
James, what comes to mind as we talk about all of this stuff is John Perkins' book, Confessions of an Economic Hitman. You kind of touched on it really broadly in the earlier here in the interview when you talked about the fact that the modus operandi of the criminals is to enslave nations to debt, to enslave populations to unrepayable debt. That's certainly the IMF model. And I want to call attention to your recent article, Time to Be Your Own Bank. You wrote, Global Bank Account Pillage Being Set Up. G20, IMF, Financial Stability Board, and our underinsured FDIC. And you wrote to me in a note, the Bank of International Settlements sanctioned FSB has been laying the groundwork for a G20 bank bail-in. Can you take us through that a little bit? Because as we
Yeah.
see the Ponzi begin to collapse, people need to get wise to it and figure out ways to protect their money while they still can.
Yeah. What I mentioned is the Bank for International Settlements, which most of your listeners probably know is the central bank of all central banks.
Right.
They basically dictate the terms for all central banks and how they operate. Well, they have this, I don't know what you call it, it's a board of some sort, and it's been around for a few years, and it sounds innocuous and not harmful or anything, but it's called the Financial Stability Board. And it literally works. Their office is literally in the Bank for International Settlements building. So they're literally, when I see the Financial Stability Board, I just think in my head, okay, the Bank for International Settlements. I mean, it's basically what it is. So recently they were at the G20 meeting in Australia, and there's been other experts in this field that have talked about this as well. And if you drill into it, it's pretty heady stuff. There's a lot of white papers and documents. But when you drill down to it, really what the Financial Stability Board or the Bank for International Settlements is driving for is that they want the G20 to build an infrastructure so they can have bail-ins for banks when the derivatives go bad. And eventually, we all know that those derivatives have grown to such a large size and that the bets are so large that eventually, if it does go bad, there's going to be a lot of people holding the wrong end of the bets. And when you drill into what they've done and what they've signed off on, it's already been signed off on. These G20 countries just rubber stamp this. Basically, all the derivative holders, they'll be first in line as creditors when someone goes bankrupt. And people who have, checking accounts, savings accounts, all that stuff, they'll just be a creditor, but they'll be way down the line. And basically, they'll probably get pennies on the dollar. Whereas those that held the derivatives that won the bet, they'll be first in line to get the credit. So it looks like, just stepping back from it, it looks like an attempt to further consolidate global banking, to have the winners with the right derivatives get larger, and the losers with the wrong derivatives, they're going to lose and go bankrupt. And the people who have their bank accounts with them could end up getting bailed in, kind of Cyprus style. So yeah, that's what it looks like. I mean, in the article, you can drill into their white paper and read what it says. It talks about having a bail-in power, basically. And so, yeah, if you go through it, you'll see they've rubber stamped it. It's already set in motion. And I expect that in the next derivative crisis, they will use this all across the world, throughout the largest 20 countries.
G20 nations rubber stamp global bail-in infrastructure. You posted on Twitter. It's coming, and clearly the powers that be have been aligned against humanity for centuries, but it's becoming very evident to those of us paying attention that it's never been more so the case than it is today. These banksters are truly aligned against humanity. I've been saying for a long time, James, that at this point, World War III is humanity versus the banksters. It's all of us against the Bank of International Settlements, against the Rothschilds, against this bankster cartel. It's I think, what Woodrow Wilson referred to when he said there is something behind the scenes so evil, so secretive, so dark, so foreboding that, and I'm paraphrasing here, that intelligent men dare not speak above their breath when speaking in condemnation of it. It is truly the octopus. It's, I think, as Matt Taibbi has described it, the squid. How does he?
Yeah, he talks about like a squid on the face of humanity.
Yeah.
And it's just the same concept of a boot on your face. That's the future. That's what it looks like.
Yeah.
Yeah,
Well,
I mean it's tough because it's so dark and ugly. There's also positive sides as well. I think that there's some things out there that there's a fight for people having the ability to move money across countries very cheaply with cryptocurrencies and stuff.
Right.
And there's people who look at that and think, oh, that's a government operation too, to try to get people used to currency that's just digital alone. And I could see that point as well, because say Bitcoin got a lot of headlines, more so than I would ever expect from a cryptocurrency. And that kind of makes me a little bit cynical. But back to the point is that it's difficult because you're looking at a trend that is not stopping. The banking system is getting more consolidated, more globalized. I guess the only question is what will you as an individual do, because really when it comes down to it, you're the only one that has control or dominion over what happens in your life. And to be able to control what happens on the global monetary system scale is a very, very difficult thing. You can try and influence other people, but overall, you have to make your own decisions and choices.
Well, and a lot of people are choosing to buy precious metals in physical form. The fact that U.S. Silver Eagle sales out of the gate here in January have been extremely strong and potentially on par to have a new record for the month of January says a lot. And I think that we should circle back and talk just a little bit about that Ted Butler allegation that J.P. Morgan is the big Silver Eagle buyer out there. I know that you don't agree with that, and we're not trying to throw Ted Butler under the bus, but you're a very educated guy, and I wanted to talk to you about that. I don't think you agree with that thesis, do you?
No, I've been working in the trenches of bullion for since 2008, since the crisis hit.
Mm-hmm.
Now, the former company I worked with was goldsilver.com with Mike Maloney. And at the time when his book came out, which was like the number one book on the subject of gold and silver investing for years, when it came out, we still had, brick and mortar bookstores back then. So like people would just run to Borders and start reading, books. And when the crisis was happening, they would find the gold and silver book, and they would end up finding our company through the book.
Mm-hmm.
And in the book, he mentions his favorite vehicle for silver investing was Silver Eagles. So that was interesting because that meant a lot of our customers just followed suit and bought a lot of Silver Eagles. And there's a lot of good reasons to buy Silver Eagles. I personally, that's the majority of the bullion I own, and then there's a lot of reasons. And I'm not going to go into it. It's too many reasons, really. But the fact is that at some point in about, I think 2011, we had that's like one of the only transparent parts of the retail market is that the U.S. Mint actually publishes week on week what they're going to sell, what they sold for Silver Eagles and Gold Eagles. So I watched that like a hawk. I crunched those numbers like a hawk. I always found out what market share we had, month on month. And at one point, we had driven ourselves up to 5% of the entire market. And that was pretty cool. The concept that we were moving one Silver Eagle per tube going out the door. I was pretty proud of that, and so was Mike and everyone else involved. But the idea that J.P. Morgan has somehow bought half of the market from 2011 to today would mean that we were moving 10% of the entire Silver Eagle market, which is ludicrous. The fact that we even got the 5% was pretty strange. Anyways, that's kind of it's anecdotal, of course.
Mm-hmm.
But to get even, further into it is that I have relationships with, the largest authorized purchasers in the entire world. I mean, good relationships. The guys, I played golf with them last weekend.
Well, you mentioned that to me. He was, is he the head trader from one of the largest U.S. Mint?
That's correct.
Okay.
Yeah, exactly. And
approved purchasers. Is that what it is?
There's only a handful of them.
There's
and
6 of them. Is that right?
Hundreds of millions, if not actually billions of dollars of bullion per year.
Mm-hmm.
And these are the guys who sell to, your local coin shop, and they sell to your online retail bullion shops. So they're moving, tons and tons of U.S. Silver Eagles or bars or rounds or any of the things that you buy at the coin shop, really. And I brought this up, and, it's kind of embarrassing because really, if J.P. Morgan was going to go out and do this, they would be buying from refiners, they'd be buying from mints and miners. They wouldn't be buying retail bullion coins with a $2 seigniorage fee from the U.S. Mint, unless they were going to turn around and sell it back to the APs at a huge premium down the line. I could see maybe that trade, but overall, when I asked him the question, he looked at me and he just kind of smiled, and he brought up the same point. He's like, they would simply buy 1,000-ounce bars in large lots and store it in big vaults and warehouses.
Right.
And so, the idea that they have proxies out there running around buying half of the entire Silver Eagle market of coins is ludicrous. It just doesn't make any sense. I know there's some hedge funds out there that buy and sell,
mm-hmm.
and a lot of them took baths from buying in 2011 and coming back and dumping a lot of their bullion back into the market. And those are times when you see a lot of the sales go on with like backdated coins that are totally fresh and mint.
Mm-hmm.
It's because a hedge fund, bought and sold a physical holding.
Mm-hmm.
But hedge funds, I don't think they take up more than 5 to 10% of the entire retail market. So the idea that we have proxies out there, for J.P. Morgan buying up half the lot, it's not true. And what I would say to Ted Butler is just simply like, first of all, thank you for all the great work you've done in helping people understand the opportunity. Secondly, you've done such a good job that the momentum is so large that the internet has helped communicate this so well. and you've had so many other people learn from you who've taught other people, that it's just gotten larger and larger year on year.
Yeah.
There's just more and more people now buying it and using silver and gold, mostly silver, as it's basically a savings account. Every couple months just coming in and putting more of their capital into a silver savings account that they hold in their hand.
Yeah, and Ted Butler has done amazing work, so obviously he's a friend of the cause, but he just may be wrong on this one. But
Yeah.
who do you think is then buying all of these Silver Eagles? Because when we talk about 30, 40 million Silver Eagles being sold in a year, I can tell you that none of my friends, colleagues, or neighbors are buying precious metals in physical form. None of them. None
Yeah.
of them. So who do you think it is? Is it large nation states? Is it just very well-informed people at the top of the pyramid who know the crash is coming? Most people aren't well-heeled enough to even buy a monster box.
Right.
So how do you explain 45 million Silver Eagles being sold in a year? Who's buying all of it?
So when I look, especially, when I look at the revenue for our companies and where it comes from.
Yeah, you'd know better than anybody, right?
Yeah. So when I look at like the revenue and how much is controlled by what purchases, there's a small flock of 20% of your customers bring about 80% of your revenue, right? But of that 20% of your customers that bring you heavy revenue, most of them that bring you large purchases. They come in. I'm talking about people who just came in with their IRA, who put in $50,000 to $100,000 of their entire retirement savings into silver or gold in an IRA. And if it's in an IRA, they don't have to choose silver or gold eagles. They can choose almost any sovereign coins that are out there in the bullion market that are struck by, say, Australia or Canada or Austrian Philharmonics.
Okay.
They can also put in COMEX approved bars. So it's not to say that they have to buy silver or gold eagles,
Okay.
but most of them do. And it's just the flat out truth. The high majority, probably 60-70% of them, stick with silver or gold eagles.
Okay.
And then the other thing is, so you have a lot of people coming in with IRAs who, maybe comprise about 10 to 20% of the entire market. But you also have a lot of millionaires and a lot of entrepreneurs in this country, and as well outside of the country, who are buying large lots. They're buying, they come in and they buy a case. They buy, 50,000, 100,000, even seven figures. We move a couple $1 million trades here and there, and the bullion just gets shipped off to, say, Singapore and Brinks, or to Canada, to a vault somewhere out there, or to Salt Lake City, or down to Miami. We have Latin American customers who buy in seven figures. So there's a lot of people who are millionaires who hear this stuff and research it online, and who make large purchases, who comprise of the majority of the retail in terms of dollar amount. They are the ones that really comprise of the majority. And when we back up and look at the total spectrum of how this retail market gets done, the vast majority aren't online. They're not making videos about unboxing, their products. They're actually very quiet. It basically comes down to, I think, the high majority of the retail sales are really done by larger purchasers, people coming in with their entire retirement savings, IRAs, or, we have a lot of, entrepreneurs in the United States who come in and who buy in lots of, 20,000 up to a couple million. The small minority, of course, they buy a lot. But it's not close in comparison to the majority of these quiet, larger orders.
Okay, well, that's an interesting perspective. And the other interesting perspective you can leave for people here, too, is that for anybody who wants to get into bullion investing and use some of their retirement funds for that, I'm not a financial advisor, but I would advise people to take a look at your book, The Beginner's Guide to Bullion Investing. Why don't you tell people where they can get that book, and then tell people how they can do business with you guys. And in the interest of full disclosure, we're sponsored by SD Bullion over at SGT Report, and they do a fantastic job. But I've bought some precious metals from you guys in the past as well. So tell people about your book and tell people about how they can do business with JM Bullion.
Sure. The book, you can find it if you just simply visit jmbullion.com. If you're just on our homepage and you scroll all the way down to the bottom of the page, there'll be this little pop-up that comes up that offers you the book. And you can just click on it, and it'll take you to a page where you enter an email address, and it'll send it to you instantly, digitally, to your email. It's a digital PDF you can open up and read. And it's called The Beginner's Guide to Investing in Gold and Silver. I mean, it's not just simply for beginners. If you're someone who's in this market and you want to learn, basic things like how to avoid counterfeit fakes, like how to ship gold and silver safely, 100% insured domestically, how to avoid, getting involved with a bankrupt company like a tolving ahead of time. How to perform due diligence every time you place an order online. Real basic things that you can make sure that you're not on the wrong end of the stick. Fundamental stuff that most people don't even know. So this also has basic fundamentals on the gold and silver market as far as supply and demand, what's driving it, and where it may go. So yeah, it's all there. It's free. You can get it at jmbullion.com. Just scroll to the bottom of the page.
Well, James, it was great to reconnect with you. Why don't you tell people what your Twitter handle is? You've got a great Twitter page. Can you
Sure.
tell people what's
Yeah.
your Twitter handle?
Yeah, my Twitter handle is @JamesHenryAnd. Just @JamesHenryAnd.
All right, very good. People can subscribe there. Well, James, thanks so much for joining us. And guys, thanks for tuning in. Thanks for listening. Thanks for supporting us at sgtreport.com and thelibertymill.com, where we provide real news, truthful news, 24/7. Have a great week. James, thanks, man.
Yeah, thank you, Sean. It was a pleasure speaking with you.
You too. Thanks, guys. Bye-bye.